Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
It was nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday. Looks like we just got a transmission from Julie at HQ. Huge sales store-wide happening all month long.
Okay, great. Can you put that away now? It's distracting me from my driving.
One of these days, we need to install autopilot because I seriously think we're lost.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hey, everybody. Welcome back. Good morning, good afternoon, wherever you are in the world. Thank you for being here. Happy CPI day to you. Let's hope it's a happy CPI day. These days can be very, very volatile. And as we kick off, I appreciate everybody who's waiting here. We got 450 people watching already between YouTube and Twitter. I imagine that number is going to continue to climb. And I want to ask a favor as we get started on today's show. If you could take just a second to thumbs up the video if you're on YouTube and heart the stream here if you're on Twitter. I would greatly appreciate it. It helps just to get the word out, get the algorithm doing its algorithm things to get more people showing up and enjoying the CPI show here with us. It's a big day. CPI, I said this to Frank yesterday. Frank, if you don't know, he comes on the stream pretty frequently, but he also works at my office helping with the dev side of building the software tools that we offer. And Frank and I were chatting. We also, of course, have traded together for a long time. We're talking about CPI. We're talking about labor data. And there was a pivot here recently where, labor data became more interesting to the market. Specifically, if you guys remember August 5th, where you had this ginormous plunge in, the stock market. NASDAQ at one point was down 19% from the highs in just a few weeks. It was a sharp sell-off. And that was a lot of the reaction to sort of, remember the carry trade unwind, the Japanese yen getting real strong. Well, that was in response to the jobs data that came in from the United States. Jobs data was all the centric focus for a little bit because people started getting fearful about a potential recession. But then you have this pivot back where, okay, labor data has actually since then come in decently okay. Yes, you had a bad NFP report last time, but, we can kind of put labor data to the side here because, again, you had a really good beat the month before. You had a really bad report this month. But then you also have unemployment rate, which is not necessarily as threatening as perhaps it once was, right? It's starting to maybe cool off a little bit. Unemployment claims, we've seen this come in each week, relatively tame, not too threatening. So the bigger question now is, I don't think it's nearly as important as back to where we were a couple months ago, CPI in clear view. The focus now, in my opinion, is very much on the inflation story. Forecasts this morning, guys, are actually for CPI to go up to 2.6. Last time they forecasted 2.3, we got 2.4. The question that we have in front of us now is, okay, this part of the story, if you will, for the Fed has been a pretty good one. Inflation has really come down. Prices are rising, but rising a lot slower than they were a couple years ago. Now, when we talk about inflation throughout history, if there's any other history nerds out there, inflation, you will be well aware, is what is oftentimes referred to as an empire destroyer. Inflation, high levels of it, can completely derail a power in the world. The Romans, by the way, struggled with inflation, high amounts of inflation for centuries. And it ultimately was a large contributor, according to historians that would know way more than I do, a very large contributor to the fall of the Roman Empire. Now, why are we talking about the Roman Empire? Well, because although times have changed, technologies have changed, human beings, we do similar things over and over, right? So watching inflation is very, very important to the story of the empire, which is the global reserve currency, the dollar. The dollar's been raging up recently, and I want to talk about that because that's very important. The dollar index is almost at 106. It tapped 106 yesterday. And the question is this a red flag? Is this concerning to us? And the answer that I would give you is this a red flag, like major red flag? I would say no. I think it's more of a yellow flag. It's a yellow light, because the dollar being where it's at 106 is largely, in my view, due to other currencies being weaker than the dollar, not necessarily that the inflation in the United States is going crazy and the Fed's going to have to rate hike. That's a different type of dollar strength. If, however, I say yellow flag, because if that yellow flag turns red, meaning we start to see the dollar really go up, if it accelerates higher from here, that could be on the backs of high inflation, concerning changes in Fed monetary policy plans going forward, meaning does the Fed start signaling that they want to pause rate cuts next year? That would be very alarming to the financial markets. Specifically, I'm talking about stocks. And by the way, gold would not like that either. Gold is another topic that I do, of course, want to discuss here with a few minutes to go before CPI. Gold is, this CPI report is very important for gold. If inflation is, in fact, bottoming out, so let's go back to our inflation chart for a second. If inflation is coming down and then sideways and then down again, right? That's what we've got. If the story is that we are bottoming out, flattening, or even worse, starting to rise again in inflation, we have to be open-minded to what that means for markets. Rising inflation may put a dent in the Fed's, soft landing story. I'm not necessarily saying I think that's what's going to happen. I'm telling you, we need to watch to see, because if you get evidence today, let's see, what last time we had a higher than expected CPI. The time before that, we had a higher than expected CPI. If you get a higher than expected, let's say we get 2.7 today. Let's say we get 2.8. If you get a higher than expected CPI today, then that would be the third one in the row where inflation numbers came in higher than forecasted. And 3 in a row is a figure that I like to, it's sort of a subjective number that makes sense to me. If inflation falls, for example, 3 times in a row more than what was expected, then that shows some really good disinflation is sort of trending in the market. In fact, we saw this 5 times in a row, right? And that got people real excited. That's why the stock market has pumped like crazy is inflation's cooling, cool, the Fed can cut rates. What dents that story is inflation numbers coming in higher than expected for a new trend. That also hurts the gold story because gold likes rate cuts as well. Gold, if you are somebody out there who is a gold bug, as we call them, if you're a gold bug, if that's what you trade, what you need to understand about gold is gold wants inflation to cool off so the Fed can cut rates. In fact, what gold really wants is the economy to cool and inflation to cool, because then you just get a screaming move up in gold. We got 950 people here watching 982 people watching between Twitter and YouTube. I just want to, again, reiterate and ask a favor of you. If you are enjoying the stream, if this is helpful to you in any way, smash that thumbs up button or that heart button if you're on Twitter. Help us out with the algorithm. I really appreciate it. So we've got a couple minutes to go. And I say this every single CPI. If you are somebody in the audience who is saying, do I buy gold or do I sell gold? And what's gold going to do? Or do I buy the NASDAQ or sell the NASDAQ? What do I do? Just pause and just, where's the Michael Jordan meme? Get some help, right? Just chillax for a second, okay? If you're gambling the CPI news spike, I think you really need to just take a second to evaluate what you're doing. I've been to the casino and I've treated the markets like a casino. And I can tell you, going to the casino is way more fun. If you're just here to gamble, make a trip out of it, go to a casino, go lose your money there. But if you're trying to gamble on news events, meaning you're leveraging right up to the bell and you're making a gut call on where it's going to go, it might work for you once or twice or a couple times, but eventually it's going to catch up to you, and the markets are smarter than you, so they're going to take their revenge. Don't let that be you today. Trade responsibly. Trade with small risk per trade. These are things that I've found in my career to be crucial to staying in the game. I wouldn't be here this long if I had just made irresponsible trading decisions, and I have in the past. I'm not saying I'm perfect, but I put that behind me, and it was one of the best decisions that I've ever made for my trading career. Risk small. Don't gamble news spikes. I'm telling you, you can blow accounts faster than you know. We got 1 minute to go, guys. I've got all the charts here. We're going to be reacting. I also want to just encourage you, don't leave right after the spike. We got 1,100 people here watching. A lot of people will just watch the spike like true degenerate gamblers, and then they'll leave the stream as soon as the spike happens because they're like, oh, no more monkey moves happening in market. I can't, blow my account in 2 seconds, right? Stick around. We'll explain what the CPI number actually means for markets. We'll discuss that in depth, what it means for gold, silver, stocks, etc., oil. Let's actually understand the CPI report. Let's not just, throw it all on red here right before. That's silly stuff. Don't be that guy or that girl. But let's face it, you're probably a guy if you're being a degenerate gambler right ahead of news. We're not discriminating. Maybe there are some ladies who love to gamble as well. I don't know. Anyways, I just know when I go to the casino, it's me and the bros, and we are just all degenerates about it. So don't let that be you. Got about 10 seconds to go, and breaking news coming in. All right. Let's see what we've got for CPI numbers coming out here in just a second. Okay, initial reaction, dollar index is a bit lower here. Stocks slightly higher, gold slightly higher. My guess is inflation just came out at I'm going to guess 2.5. Do we get 2.5? 2.6. I was off. 2.6. As expected, perhaps some of the fears that inflation was going to be worse than this are out of the market, and maybe that's why we're seeing a little bit of a bump in stocks and gold. Dollar index is coming down here this morning a bit. So what do we do with this? What does this mean, Nick? Tell us. Well, it means inflation is it's higher than it has been the last few months. 2.6 is moving away from our goalpost of 2% inflation targets, right? According to the Fed. But at least it wasn't a 2.7. We have to think about this. Always think, guys, when you're thinking about economic data, about forecast, right? The consensus amongst analysts and amongst the market, where inflation is expected to be, and what actually comes out. These two numbers are often different. In fact, look at this chart that I'm staring at, and you can see the blue bar oftentimes comes out differently than the red dot. The red dot is the CPI forecast, and the blue bar is the actual CPI that comes out. You can see oftentimes it is different, and the market moves the most usually when these two things are further away from each other, right? When you get a big divergence between what was expected and what actually comes out, that can cause some serious volatility in the market. I got to add Bitcoin to this chart because now I'm a Bitcoin guy apparently. So I got to put Bitcoin onto my list of screens here. Anyway, stocks are higher here, perhaps just shrugging off the uncertainty that was, are we going to get a 2.7? Are we going to get a 2.8 inflation report? 2.6 is not so bad, right? I guess it's not great because we're coming up from our lows of 2.3, but not worse than forecasts, I guess. Core CPI also, thanks Ivan, 3.3 compared to 3.3. So inflation came in. Also, I'm hearing from some audience members that the screen is a little bit laggy. Stay tuned. I'm just gonna restart my screen here, screen sharing, and let's put that in there. Let me know if that's a little bit better, guys. Sometimes my computer starts to get tired during these streams. It's running a lot of software at the same time, so sometimes it can get a little bit slow. Anyways, NAS is in back to 6K. It seems 6,000 on the dot here. Gold is at 2,600. Nasdaq is at 21,100. Dow Jones up here. Russell's up a little bit. Dollar index initially came lower, now bouncing a little bit, staying in the 105.88 level. Let's switch back over and take a look at some individual charts here for a moment. So looking at the S&P 500, again, we are sitting at that 6K level, 6,000 just about on the dot here today. And stocks just continue to party on. There's a number of reasons I think that for now, the stock market is just having a parade. The bulls are having a parade. And we could list them off real quick. I mean, some of the easy, obvious ones are the Fed is still expected to cut rates. Lowering borrowing cost is basically injecting money into the stock market. So that is, a positive for stocks. It's also, the idea that cutting rates helps the consumer. Consumer might feel a little bit better. Maybe they can go out and buy a new car, take a vacation. All of that turns into, again, that's how the money gets injected into businesses. There's also the rally behind the Trump presidency, I think. Less regulation, less taxes, more government spending, which government spending also finds its way into the S&P 500 names, right? Because again, government spending, it just injects money into stuff, and then where does it end up? In the businesses, right? So stocks are higher on that. And then there's also the hope that I've said many times on stream here, fingers crossed, that peace in the Middle East, peace in Ukraine is hopefully something that comes out of the next few years. Whether I've said this many times on the show, not to get political in any way, but simply whether you like Trump or dislike Trump, let's just hope that he is, able to sort of put together a plan for peace that, ends up with the least amount of suffering in the world. And the market loves that, right? The market loves peace. The market loves, the prospect of lower oil prices that would come out of peace, right? Speaking of oil, oil's down at 68.7, guys. The idea here is that, and by the way, I spoke yesterday, I said oil is very low here, but oil can go much lower. You have to understand there's a couple things that could get oil to go much lower. Some of them good, some of them bad. Peace could get oil to go lower in a good way, right? Less concerns about supply constraints. Maybe we lift some sanctions. Maybe we get to a point where there's not, everybody just locked up and boycotting each other. Maybe there's we can only hope for some sort of peace. Anyways, the other scenario is not so good. If you get a severe slowdown in the economy, that is another thing that could send oil. Let's do a history lesson. And again, this market, whether you trade oil or not, pay attention. This market is really important to everybody. It has a lot of correlation, by the way, to the 10-year treasury. Not so much recently, but inflation is very... There's some correlation between inflation and oil prices, and we've talked about that many times on stream. But just as a reminder, oil prices can tank, pun intended, tremendously in periods of economic slowdown. In 2015, we saw one of the most recent periods of deflation, and people sometimes will say, when are prices going to go back down, right? We all in theory, on paper, would love to go to the grocery store and it costs less money, or go buy a house and it costs less money. Yes, that is true. But unfortunately, what typically happens for prices to go down, it's usually off the back of recession and really tough times where people are losing jobs tremendously. And, it's tough times out there for people, like way worse than what we've got now. Everybody losing a job is no fun. And those are the scenarios that typically get oil prices to plummet. So that's something that I don't necessarily think is on the horizon, but it's always something to consider with oil prices. Currently, however, oil prices are low. I think that this is a beneficial thing to the inflation story. And again, today we came in as expected. It hasn't populated yet, but the Edge Finder will put it right there, basically showing a slight uptick in inflation, but not worse than what was expected according to forecasts here, the red dot showing forecast, right? Current top setups on the Edge Finder, we've got stocks still getting bullish readings here, which has been, a strange but very effective outlook here the last few months. Even though it feels like stocks are high, they have continued to trend higher. I am currently trailing stops and managing active long positions that I have on the indices. That is one of the areas that I have the biggest positioning on the long side. However, I'm trading those things cautiously. I very much understand that when you're at all-time highs with stock market stuff, there's sometimes melt-up events that happen, and they can go on for so much longer than we think. Like the NASDAQ could just go do this for the next few weeks. In fact, I do actually think, if I'm being completely honest, that the Trump trade could at least go on relatively unbothered until, what is it, January 5th? When is the new president sworn in? Regardless, you get my point. I think there's a bit of a runway. The buy the rumor trade may be actually better than the trade itself. So let me explain this. Again, I'm not here I'm not a mega Trump person. I'm just pointing out that for the stock market specifically, let's just detach everything from our emotions for a moment. The market is telling you that it is excited about the prospect of lower taxes, lower rates, and less regulation for businesses, right? That's the idea. Now, whether you agree with that, whether you disagree with that, whether you think they should do something different, for a second, it doesn't matter. The market is excited about that, and there's a rumor that those things could be good for the market. Who knows if they're going to be? I don't claim to know that for factual, purposes. I'm not here saying that is definitely going to make businesses way more successful and the consumer way more successful and unemployment's going to go to zero. I'm not saying that. What I am saying, however, is the rumor is that it's going to. We'll see if the rumor comes true. But the point is, as a trader, we can just trade that moment. That's the beauty of being a trader as opposed to just a long-term investor. There's nothing wrong with long-term investing, but with long-term investing, you kind of just buy stuff, you close your eyes, and you hope that when you open them again, there's something left in your account. That's long-term investing for you. So, and as a trader, you just know very quickly if there's nothing left in your account. But where's my sound effects? There we go. There we go. Jokes. You shouldn't be risking too much. You shouldn't lose all your account very quickly. And if you are, your sizing is severely wrong. Anyways, my point that I'm getting at is, again, detach whether you like Trump or not. Just the moment right now is that there is optimism around certain things. And I think that until we actually start to see in action Trump, there's a rumor trade that I think has a lot of potential. And I've already taken, longs before. I'm long on Bitcoin. And all I can do is manage appropriately. In fact, if we take out these highs, what would be appropriate for me to do is probably trail this stop loss that I have on my Bitcoin trade and just say, look, I'm not going to get greedy with it. I'm simply going to manage the position and follow the trends that I'm seeing right now. The trends that I see right now are optimism surrounding the Trump presidency for risk on assets, not necessarily for, social political movements or things like that. I'm not saying anything about that. What I'm simply saying is that businesses are excited that they're going to get less taxes, more money in the pockets of businesses. Whether you like that, whether you dislike that, whatever, it's not what we're here for. We're here to trade the market. The market is excited about that. Risk on assets are performing really well here. And I think that catalyst could last for a few weeks. And if I'm wrong about that, right? Nick, you're sounding all sorts of fancy language about this stuff, but what if you're just wrong? And what if the market just tanks the next few weeks? Well, again, that is where I admit that I'm sometimes an idiot and I don't know everything. And as traders, you kind of have to be able to do that. So for me, what that means is that, okay, the Trump trade is happening. I'm going to simply trail a stop and I'm going to manage positions that I have running. And I'm not going to get greedy, and I'm not going to make a gut call prediction that, everything's going to be rosy under Trump. And again, I'm simply trading the markets. And I think that, and I'll say this, when Biden got elected, I was super bullish on the market too, because, right, the prospect of, we know who the president is, there's this window of time. It's the fourth quarter. Seasonally, it's a strong time for risk assets, right? Let's go look at that. I want to show you something. It's important that we discuss this as well. It's not about Trump. It's not about Biden. It's not about politics whatsoever. It's about the antics of the environment that we're in. November is historically a very positive time for stocks. November and December. The Santa Claus rally, Thanksgiving period. These are times that on average, not every year, on average are good for stocks. They're good for things like Bitcoin. It's a positive period of time for risk assets, right? So when I'm discussing these things, I'm not saying in absolute terms that they're going to go up. I'm saying that I have identified these theories, these ideas. They are theories. They're not certainties. And I'm trailing a stop loss. I'm just managing trades that I have on. I think they could continue, but I don't know. And there's a big difference. And as a trader, one of the most groundbreaking moments for me was when I realized I never know with certainty what's going to happen in the markets. So the only appropriate thing for me to do is to make educated decisions, educated guesses with small trading size per position. I'm not out here throwing 17% of my account on a call option that expires in 2 days, right? That is gambling, right? Educated guesses with a 55% win rate, right? On a 1-to-1. You're going to make money over the long term, but you might lose money this week. You might lose money this month. You might lose money this quarter. But over the long term, we're going to make more money than we lose. But the only way you stay in the game is by being responsible with your sizing, right? And making educated guesses that are backed not just by fancy price action patterns, but by fundamentals, right? Let's look at seasonal trends. Let's look at the commitment of traders data to see what institutional money's doing. What are they buying? What are they selling, right? These guys obviously employ like a floor full of PhDs in computer science and economists from all over the world to make decisions. So let's see what they're trading, right? Let's look at the put to call ratio to make sure we're not just trading alongside the crowd too much and that we, maybe spot opportunities that could come in. Data plus educated guesses plus risk management is the key to the profitability that I have found in the markets. I am not the world's greatest trader. I'm not here telling you that you're going to be the greatest trader if you do the same things as me. I'm simply going to tell you that this is what has worked for me after the years and years and years that I put into learning this stuff and building tools and everything that I, preach and talk about. That's, the idea. Anyways, one thing I'll mention also is that we are currently doing this week our 40% off sale for Black Friday. If you have not picked up a copy of the Edge Finder, now is a great chance to do so. You can get access to all of our data. My background is in software engineering, and before I was doing trading, I was working as a software engineer and doing all the programming stuff. So when I found out about trading, I combined the two things. Today, I do, of course, trade, but I also run a software business that builds all sorts of different analytical and dashboard tools for traders. If you'd like to get access to the Edge Finder, which is, giving me all of these different tools that I use every day, genuinely to help me find the trades that I take. If you would like to get access to this tool during the 40% off Black Friday sale, we've dropped a link here in the chat. If you send us a direct message using this link, we'll get you set up with a copy of the tool for our lowest price of the year, or you can use code YTVIP at checkout. I'll drop the link here. You can explore the tool and all of its features here on our website. We have poured in 2 years and hundreds of thousands of dollars, if I'm being candid, to build the tool that you're looking at. It's been a massive project. It's been one of the most fun projects that I've worked on in my entire life. It is essentially a data hub for people who want to learn more about fundamental analysis. So if you're interested in getting a copy during our Black Friday sale and supporting our work and getting yourself access unlimited time to a wonderful tool for fundamental analysts, now's your chance to get it for the lowest price of the year. So there you go. Again, and that code, by the way, if you just want to punch in the code at checkout, is YTVIP. And if you have any questions, are interested in a payment plan, want to pay with crypto, want some more information about the tool, the best way to get all of that would be to speak directly to a member of our support team on our website. We have several trained people on the tool who can assist you and give you some more information about how the software operates, how it might benefit your trading, etc. Nick, how's the euro yen trade going? Yeah, euro yen was an idea on the Edge Finder the last few weeks, and I finally got the pullback that I was looking for. I think it's done well here this morning. Yeah, it's done okay. We're in profit on this position, but nothing really to write home about. What I'd like to see before really trailing a stop on this thing would be a break through these highs. So we've got resistance here. If we can get above those levels, I'll start trailing a stop on this one. And if we just go down and take out these lows, then it wasn't the trade I was looking for anyways. So euro yen, I do like it. Very nice level of support here. Generally speaking, I'm pretty risk on at this moment, which means for me on the currency front, shorting the yen. We also have noticed a very hefty short position. 63.4% of positioning here on the COT data is on the short side of the Japanese yen. That gives me some extra confluence here. For example, gold this year has been incredibly bullish by institutional money, and that's been probably the trade of the year, has just been long gold, right? So, I like the yen short idea. And when I say yen short, remember that if you are long euro yen, you are long euro short yen. Gold is up 0.5% here. It's sitting at support. I'm very curious to see how levels react here. I'm pretty neutral on gold at this time. So I'm not really interested in taking any trades. I think some of the unending uptrend that we've seen in gold this year might be behind us for now. Who knows? It might be a 2025 resurgence in gold. There might be another, uptrend round. But currently what I'm seeing is that economic data in the US, in fact, I played around and fixed my gold scanner here. I'll show you this data point here. So, okay, we got the CPI data in already also. This is awesome. So we got a -3 reading here on gold. So that's not very bullish. It's not too bearish. On the Edgefinder scoring system, a -5 or lower is considered bearish. GDP growth was better than forecast. That's going to be, I'm sorry, it was worse than forecast, which is a positive thing for gold. We always look at, for scoring, by the way, we tend to look at the forecasted values versus the actual ones that come out. So manufacturing PMI came in lighter than expected, which is good for gold. Remember, gold thrives off of economic uncertainty, fast rate cuts, geopolitical conflicts, etc. So when we're attempting to score an asset like gold using macro data, this is our function. This is our algorithm of how we do this. Okay, and each one of these, by the way, are contributing to the score. So GDP, positive, right? Manufacturing, positive. What about services PMI? Services PMI came in better than expected, which is not good for gold. Retail sales, we get fresh retail sales data tomorrow, by the way. Inflation, right? Inflation today is at 2.6%, came in as expected here. And core CPI also came in as expected. So what we can see here is that sort of just neutral. There's some positives for gold. There's some negatives for gold. Until these things sort of all generally point the same direction, I'm really cautious on getting overly bullish or overly bearish on gold. So I don't really have a reading. If we're sticking to just technicals for a second, it's at a level of support, but I think the uptrend has sort of cracked. So I wouldn't be surprised if we just kind of go sideways, but we'll see. Again, I don't really have I'm not taking any positions on gold. That's not something that's actively on my, hit list at this time. Let's see. Let's just filter out and just do neutral, or I'm sorry, current bullish and bearish readings. Got some euro pairs here hitting up on the bullish side, euro dollar, euro kiwi, euro cad. I'm going to get really specific. If I take out minor currency pairs, you can see we only have three things: the euro, the FTSE, and the Nikkei. So kind of a light watch list right now. Nick, I have a question. Are all of your trades fundamentally based? Like you back all your Aussie dollar, Kiwi dollar, pound yen trades with fundamental analysis? I struggle to keep up with all the data. Michael, yeah, great question. I know this is going to sound like a sales pitch, but I could not trade without the Edgefinder fundamentally on everything. There's just too much data. Like you're pointing out, to try and track all of the data for Australia, for the US, for New Zealand, for the UK and Japan simultaneously by hand is why that doesn't make sense. That's why we built the Edgefinder. It's to track all the data quickly so that we can then find setups based on it, right? Genuinely, we built this tool. When I first started designing this software, I had no intention of actually selling it. And I mean that genuinely. I thought I was just going to use it as like a way to help my videos and to explain things. And then immediately people were like, how can I get that? And I was like, all right, we're going to sell copies of it, and hired, a dev team behind the scenes and a support team to help people with it. And, it's become a whole movement, which has been awesome. Oil prices, I'm very curious to see where those go, because again, for future inflation reports, that will be really important. Bitcoin is near the highs. I mentioned earlier that if we can take out these highs, if we can put in a fresh higher high on Bitcoin, I'm going to trail a stop further in. I think I might just put my stop loss here if we can get a break above yesterday's highs. I would love to do that. I'm tempted to do it now, but I'm just going to give Bitcoin its room to be volatile. It is a very volatile instrument. In fact, it's probably the most volatile thing that I trade. And I don't usually trade Bitcoin that much. I've traded the last few months. I've done some options things on Bitcoin. I've sold puts on BITO several times, and now I have a long position on IBIT. And this thing is just insane. I made a video the other day about how I had no expectations that one of my biggest trades of the year would be Bitcoin longs that I took with sort of this is a big position, don't get me wrong, but compared to like my usual position sizing, this is pretty small. I say that I know that is a big position, but relative to the account and relative to what I usually place on for trade size, it's not as big. That being said, the P&L on this thing is insane because of how volatile Bitcoin is. In fact, in future trades of Bitcoin, I'm probably going to size smaller than this simply because the volatility is something I'm still getting used to. I had a stop on this trade. I was risking, a relatively appropriate amount of money on my account size, percentage wise. It wasn't tremendous, but this thing has exploded so violently to the upside that all I can do responsibly is look to just trail stops. I'd like to see this thing take out the highs. That would be my cue to go ahead and trail a stop on Bitcoin, lock further profits in, and just see where this thing wants to go. If it comes back and takes me out and I give back a lot of gains, so be it. But I also want to give it the chance to do one of these, right? And just keep going and maybe become the trade of the year. I've had a lot of great trades this year on gold, on the NASDAQ, but trading Bitcoin and it becoming one of my best trades of the year was not something I was expecting. Something I'm grateful for, obviously, but when I say I wasn't expecting, I trail stops on my positioning. So I never know how much I'm going to make on a position. I know how much I can lose, but I never know. Technically, my upside when I trail stops is technically infinity. Of course, nothing runs forever, but technically, if Bitcoin, runs up to 100K, this thing could get much larger. And, or if I trail my stop here and the market comes back here, let's say I give back, let's say it's a 25K profit, which is still an insane return in such a quick period of time. Again, I had no expectations that Bitcoin would do this much this quickly, but this is why I trend follow, because I don't know where the market is going, how far the market is going to run. I don't try and call tops or call bottoms. And that is why I trail stops, right? I trail stops because I don't know how far something can run. Bitcoin could be at 100K by Monday morning. We don't know. Bitcoin could also be at 75 by Monday morning, or it could be at 50 by Monday morning. That is how volatile this thing is right now. And the only appropriate thing that I know to do is what I have always done, which is trail a stop, lock something in, and if it runs, it runs. And if it takes you out, you just accept it and you don't get greedy. What lot size do you use, Nick? I trade on a stock brokerage, so I don't use lots. I use share counts, right? So I'm trading IBIT, which is an ETF that tracks the price of Bitcoin pretty much. It is correlated to Bitcoin. So I have 3,000 shares. But yeah, so that's just been a wild card trade. I'm watching it close. If it can take out those highs, I'm going to trail a stop. And I'm just going to accept it if it comes back and takes me out. But Bitcoin is just on a tear to the upside here. We'll see where that goes. Is anybody else trading? Anybody else trading Bitcoin? Nick, feel free to copy and use my trades when I list them on your site. If you want to know how long this Trump train runs, watch my trades and notes. Master Day, I appreciate the comment, but no disrespect, but I don't copy anybody else. I've got a system. I've got my strategy, and to each their own, In fact, if I got my trade ideas from the comment section, things would be wild. People got some Bitcoin longs. Very nice. How's euro dollar looking? Yeah, let's look at euro dollar. What's up with EU? Euro, man, this euro dollar trade reversed so hard, right? It was going so strong here to the upside. Took out that trend line kind of concept here, double topped, and just has been rinse and repeat to the downside. Yeah, crazy. It's not the same. ETFs will be screwed after hours if Bitcoin moves in the opposite direction. That is true. That's true. There's pros and cons to everything. Bitcoin I like the convenience of ETFs, and I'm a swing trader, so I don't need to be scalping, the 1 minute chart or anything for my purposes. I know people have different styles and way of trading, but if it gaps lower than my stop, it happens sometimes. Other times it gaps lower than my stop, or trades lower than my stop overnight. And then by the morning, it's way back higher, and I avoided getting stopped out. So I kind of take it as you win some, you lose some with the overnight gap thing with ETFs. Nick, do you take trades purely off technical analysis? What if you see a great technical setup, but the trade doesn't pop on the top setups page on the Edge Finder? Michael, you got the great questions today. 100% never. I never take purely technical trades. Technicals are fancy, fun, and cute, but they're not what I make my trading decisions off of. Never. Because again, technicals, I use technical analysis. So don't take what I'm about to say as like a big slash to technical traders, but technicals only have never really contributed to what I've been able to do in the markets myself. The profitability that I've found in the markets has not come from technical analysis, right? That's what everybody does. Everybody pulls up candlestick charts and tries to find an edge. Very few people in the retail trading space spend time learning fundamental analysis. Because why? Because it's harder. It's more difficult to learn fundamental analysis. There's so much to trying to study global economics, and the United States economy is it's an enigma. There's so much to learn, right? So people don't like to hear that it's going to be very difficult. So I think most people like the idea of candlestick patterns or support and resistance or moving averages because it's easy. It's simple, right? And not to say that those things are not useful or can't work. You can see on my chart right now that I'm using things that are technical, but that's not where my edge in the market comes from. The name Edge Finder is not coincidental. The name Edge Finder was this idea that for me years ago, when I started really learning fundamental analysis, I was like, okay, all the smart people on Wall Street that manage billions of dollars for people, they're not talking about head and shoulders patterns and technical reversals and pen bars. They're not talking about that stuff. What are they talking about? They're talking about these things. So I started reverse engineering what the best traders, the best money managers that I was seeing and hearing, what they were looking at. And it's this stuff. They're watching the Fed. They're watching inflation. They're listening to Jerome Powell to see what the next clues for the story is. They're trading off of that stuff. Meanwhile, what are retail traders doing? Everyone on retail trading universe is typing into YouTube, best simple moving average strategy to make a bunch of money, right? Come on. Once you start really reverse engineering this stuff and you realize, oh, you scratch your head, you say, so all the really profitable, suit wearing geniuses that are making $1 bajillion a year, they're talking about fundamental analysis, and retail traders are only talking technicals. Again, pull it up. Listen to Ray Dalio speak. Listen to, money managers that come on to CNBC and get interviewed. They are not talking about candlestick patterns. They're not talking about support and resistance. They're not talking about moving averages. They may mention those things in minimal amounts, but they're talking about the Fed. They're talking about the economy. They're talking about business earnings. They're talking about, what is AI doing for certain spaces? The reason I point that out is I'm not saying I know everything about the markets by any means, but these guys know more than me, and they're not talking about moving averages and candlestick patterns, right? So my point is I started reverse engineering that. That's where the Edge Finder, this project, turned into what it is the attempt to find more insights through the stuff that smart traders that I was listening to seemed to be focusing so much on. So the Edge Finder is essentially a tool that brings it into one place and allows traders to better take a look at fundamentals because I know how daunting they are. At first, when you learn fundamentals, you're like, GDP, like how does that impact my trading? Or PMI, it sounds difficult. And it truthfully doesn't sell as well as perhaps, the idea that simple technicals can make you a bunch of money and buy my course. Like I know that that's a really strong pitch because people want to believe that that's true. I personally don't think that's a very easy path to trading success. It's sold that way, but I don't think it's the truth. Fundamental analysis is no easy path to success either. The reality of trading is that nothing is easy to make money in this market, right? Markets are difficult to make money in. But again, genuinely, what I do, this is my process. It's a 3-step process that I go over often. Step 1, I look at the top setups page and I build a fundamental basis for why I want to be long or short a particular market. The step 1 is always for me, why? Why do I want to be long or short something? Why? Not, and a good answer for this is not, oh, a moving average crossover happened, I want to be long. For me, that's not a good answer. For me, a good answer would be, why do I want to be long the dollar? Why do I want to be, long stocks? Well, maybe US economic data has been upbeat relative to forecasts. Maybe the Fed is continuing to cut rates in an environment where the consumer is feeling better than they were a couple years ago. Those are themes. Those are big trends that a savvy fundamentalist can acknowledge, can see happening, and join the move with more confidence than just it's above a moving average, I'm going to go long, right? So that's my theory is, number 1, why? My trading setups always start from the top setups page because I'm looking for the why behind what trades that I want to take before I even look at a chart, right? Number 2 is, if I have conviction on something, then I use technicals. When do I want to get in the trade? When do I want to, buy or sell? So again, why tells me what I want to buy and do I want to be long or short, right? Why do I want to buy this? Why do I want to sell this? All of that comes from the first part. And you don't have to use the Edge Finder for this. It's the tool that we built to make the number 1 part here easier, but you don't have to. You could still study, read articles, go through, 10 different websites if you want to, and you could build a why for which things fundamentally you like. And you should understand that when I'm telling you this stuff, I do have something to sell to you, and I want to be upfront about that, because you should be skeptical of everyone, including me on the internet. But this is genuinely why I built this tool for myself. I wanted this why component to be less difficult, right? It's difficult to read into fundamental analysis. I wanted it all in one place, and that is what put us into business, is we built this tool and other people wanted it too. So why is the fundamentals? When is the technicals? And number 3 is, how do I want to manage the trade once I'm in it? And for me, I like to trail stops. Some people like to take partial profits. Some people like to just have a strict risk to reward. But this is my 3-step process. Why is fundamentals? 2, when is technicals? When do I want to trade, or when do I want to enter a position? And 3 is, how do I want to manage the trade that I take, right? So again, that is the simple 3-step process that I personally use in the markets. I told you I had something to sell you. If you are interested in getting the Edge Finder, it is currently 40% off for our Black Friday sale. It is our biggest discount that we do all year long. You can use code YTVIP at checkout. Go to a1trading.com/edgefinder. Maybe if we could drop that link in the chat for anybody who would like that, Chandler, I appreciate it. You can use this promo code at the checkout point to get 40% off. It's a one-time fee to get access to the tool that we've built. Or if you send us a direct message right now, you can speak directly to a member of our support team. We have a staff in the Atlanta office that we've got. We work day and night to build the tools that we offer here at A1. So there you go. What's up, Ashley? Good to see you, man. The party shirt man has arrived. What's up? Yeah. And if you have any questions, if you want to get access to the tool, there it is, 40% off. You can also chat directly. Someone from our team can answer any questions you have, can set up a payment plan if that's something you'd prefer to do, etc. So do you have a fully tested technical strategy? Michael, you keep coming back to technicals. Technicals are so simple for me. Technicals are just, for me, just a way to manage my bias. So let's say I'm fundamentally, at one point I was, there was a bullish setup on the Edge Finder for Bitcoin. I saw this pullback. I actually took a loss on Bitcoin before this trade. I took a long on Bitcoin over here, got stopped out, and I decided to re-enter right here because I still liked the trade setup. Put my stop loss below, and it's taken off since. But the technical side for me is really, really simple. Like, everybody here could do the same technical trading that I do. It is just support and resistance, market structure, throw a fib on there sometimes, but just trail stops. Like, I don't have a rigid, very, highly mechanical rules-based strategy. I have a very simple way of analyzing a chart, right? I'm marking highs, pivot lows. I'm entering at pullback levels. And when we put in, higher highs, higher lows, I'm just trailing stops. But let me reiterate, in case I haven't made it clear, the technical side of what I do is like 10% of the trading. Everybody focuses so much on technicals, and I personally think it's a waste of energy to only focus on technicals. There's so many more things that are more important, in my opinion, like position sizing, the trading psychology side of things, and the fundamental analysis side, which takes up like 70+% of my process, right? Studying the fundamental side of things is far more important than the technical, in my personal opinion. There's other people who trade purely technical and they do just fine. Like, that's cool, but that's not what has worked for me. And that's not what I am an advocate for. I think understanding the market story is very important. And I think more traders would be better off if they did that. But it's harder. It's harder than technicals. I've done both. I've learned a million different advanced technical trading strategies, gone down the path of so many different technical things. And I ended up just using the simple stuff, the textbook technical analysis stuff. But the harder thing to learn was embracing and learning the real stuff that moves the markets, the fundamental analysis side. None of that. No, that I feel like my head would be spinning by the time I do all that. That's just overcomplicating, in my opinion, what really just needs to be so simple. Keep it real simple. That being said, I have nothing against people who trade like smart money concepts or ICT stuff. If that is a framework that makes more sense to you, then great. For a lot of us, it's overcomplicating it. But if it works for you, then do your thing. S&P 500. Not too much movement here. Following the CPI report. CPI, in case you're just tuning in, came in as expected here. Let's see if it's in the Edge Finder. I saw it somewhere else. Is it in this data yet? Nope. Actually, yes, it is. There it is. 2.6% came in for the CPI report here this morning. That is exactly as forecasted. Markets sort of had a muted response. Gold's slightly higher here. Silver up 1%. Oil was positive, has turned red again. Bitcoin near the highs. Let's see if we can get break back into the 90s today. That would be crazy. Dollar index up at 106 here today. We'll see how that plays out. This is why I think people not real traders when they ignore the grandmaster. I'm beginning to think you fake, bro. So Master J HM Clock. I've seen your comments, man. You refer to yourself as the Grand Master. I mean this in no disrespect, but I'm genuinely curious. Could you drop like a MyFX book link for us? Like, you're you've got these claims of being the greatest trader ever, and I've seen a lot of your comments, but I'm wondering, can you just drop a MyFX book link for us, or just like a live stream login or something? You might be trolling me. It's got to be trolling. You might be. This is a good question. Sensei says, what if you take a trade on the Edge Finder, then the next day it's no longer on the Edge Finder top pairs? That's a great question. And it's actually a very relevant one for me right now, because I told you that the Bitcoin idea, the Bitcoin trade that I'm currently in, at one point was a positive link, right? I'm sorry, positive link, a positive score, which I then acted on. I found that trade setup and I went on again, remember the why first, then the when, then the how. I'm on the how stage of Bitcoin. So I took the trade initially, and it was a positive score on the Edge Finder, meaning a bullish reading came out, and I liked the setup. But then, as you just pointed out, what do I do if I'm in a trade, right, and the score falls off on the Edge Finder? Well, typically what I do is from there, I just let the technicals take me out of the trade when it's time. So I took the initial entry. Edge Finder had a bullish reading. So if you're asking, do I just close when it changes score? The answer is no. Right? The Edge Finder is not really a timing tool. The Edge Finder is a general bias tool. So at one point it had a general bias to the upside for Bitcoin. Now what I'm doing is, because I took that trade and the score changed, I'm still in the trade, and my plan is just to manage the position, right? So if I can trail a stop here, if I can move stops into profit further, and just the market tells me when it's time to get out through technicals, again, technicals are still useful. I just don't use them to choose what I trade and why I trade. It's more when I trade it, not why I trade it. The only way I allow people to see my live trades is when I list them. I don't do it any other way. So Grandmaster J, HM Clock, Mike, again, if you make the claim that you're some market wizard that, is just amazing at trading, you've got to be able to prove it. I don't claim to be the world's greatest trader, but I'll still show you my live positions, right? I'll show you when I'm right. I'll show you when I'm wrong. I told you just a second ago that I entered Bitcoin early, took a couple $1,000 loss, re-entered it, and this trade has gone crazy. But you can't just say, I'm the greatest trader. The only way you'll be able to see any of my trades is if you join me, right? How can somebody know that you're the greatest trader if you don't prove it, right? Why should anybody listen to you if you don't have any proof that you're good at what you do? In fact, I wish more people would think like that in the trading space. I wish more people would say to themselves, why am I spending any amount of time watching so-and-so creator if they do not show you their trading performance? Sometimes I go back and forth on whether or not I like the idea that I share my trading performance publicly. It's a lot of stress. It also sometimes makes me feel icky because I'm not here trying to just brag, but I very much genuinely mean this. Like, I know what it's like to watch content creators and be frustrated that they never show you their accounts. Just show me that you actually trade. So I do this frequently. This is my live broker, right? This is a US regulated brokerage. I trade on Webull. And I show this. It makes me sometimes uncomfortable because I'm like, I'm not trying to just brag about it. But I want you to know that if you watch my videos and you invest time in learning, I'm showing you up front that I do what I say I do. I'm not the greatest trader in the world. I've actually underperformed the US stock market in the last 1 year, which has been a little painful. I've overperformed or outperformed it in the last 5 years by a pretty good long shot. I made a video on that recently. But I show you this just so you know at home, you're not wasting your time watching me. There are traders out there who are making millions and millions of dollars per year. I hope to be one of them someday, but I'm not there. I'm on my own journey, and everybody is, right? Everybody's on their own pace. But when I'm talking to the audience now. I know we're having fun messing around with Grandmaster in the chat, but and I mean no disrespect, but genuinely, I want to encourage everybody who is listening, do not spend a single dollar or minute of your time watching people who will not show you their account, right? It's so important. And again, no, don't do that for me. I'm not saying that to brag. Do it for yourself. I remember desperately wanting someone to show me when I was doing the YouTube thing, like when I was learning to trade, watching people on YouTube, there are people out there, I'm not the only one who does it. There's other content creators who show their account. And those are the ones that over time I found myself coming back to. Those are the only ones that are worth listening to. Everyone else is not worth listening to, in my opinion. People who show you a track record, people who show you their account, it's a hard thing to do. There are times where I hate that I do that, because then I'm like, when I have a bad drawdown in front of everybody, you guys want to see a bad drawdown? I'll log back in. I'll show you a bad drawdown. This sucked. Like, this actually was one of the hardest psychological times in my life. No joke. I'll show you the good years, but I'll also show you the bad ones. 2022 was really painful for me. And again, I'm not claiming to be the greatest trader in the world, right? There's times where I'm just maybe off my game, where my strategy just is not very effective, right? Like, down markets typically are not good for my trading account. So, I'll show you both sides. There's excellent years, like this year has been excellent. Last year was phenomenal. 2021 was phenomenal. 2020 was great. 2022 was agonizing. To do that publicly, agonizing. So, and I'll say something else. I don't know if I'll do that forever. I don't know if I'll do it forever. There's just a lot of stress that comes with it. Like, I think, like, at some point, I may choose not to do that anymore, just simply because the psychology of it is difficult for anyone. Nick, you don't need to respond to people like Grandmaster. He has just lost his trading account in the news release. I mean, we're not here to troll anybody. I'm not here to mock or tease anyone. Again, I'm just pointing out that there are people like those sorts of commenters all over the internet. In fact, the worst thing is there's also content creators who make videos that gets tons of views, who are sort of like, I'm the greatest trader, trust me, bro. Right? Come on. Respect yourself more than that. Don't watch people who don't prove it. Don't be a dummy. I think sometimes part of us wants to believe that there's traders out there who are like taking $500 and turn it into 5 million easily, because it gives us like this like excitement, this I want to believe that. But I found over my journey, like over-investing in that sort of content and that sort of like view of the markets leaves you more broke than when you started. What you're showing takes courage, so that's why you're so highly rated. You show trading reality. Keep showing your P&L. That's your edge. Thank you, Lee. I appreciate it. I registered for the webinar, but didn't get a link to join or copy afterwards. Yeah, we'll help you out with that. Chandler or James, if you guys could drop the link to our live chat. If you missed the webinar and you'd like the recording, you can send us a DM on our website, and someone from our team maybe can help you out with that. We want to make sure if you missed the event, you can totally watch it back. It was a great event. We had a lot of fun yesterday. They earn from teaching and YouTube revenue, also random broker promoting. And that's the thing. I make money from those things as well. The difference is there's nothing wrong with having an affiliate program with a brokerage and, you leveraging your social media for ways to make money that are not trading. I have no issue with that. The issue that I have, and I think that most people have, is when people don't show that they actually trade, but they're making money from that, right? That's where I think people are like justified in being like, yo, what the heck? Like, show us you actually trade in order to, there's nothing wrong with making money in multiple sources of ways. Like the difference is, if you make money trading, and you can prove it, in my opinion, and in my own, the things that I do, I think that's valid. I think it's valid to make money in other ways if you actually trade. Like if you actually prove that you also trade. Ethereum has been crazy here too, guys. I don't know if you've seen this. Ethereum has skyrocketed. In fact, let's see. From November 6th to the highs, Ethereum went up 42.52%. November 6th for Bitcoin. Oh, get out of the way. Bitcoin went up 32.8. So Ethereum has actually gone up more than Bitcoin. That being said, Ethereum has really underperformed Bitcoin. Here's Bitcoin like scrolled out. Here's Ethereum scrolled out. Look at this. Ethereum's not even close yet to its highs of 2021. Very interesting. I'm so annoyed right now. What's annoying us? What's annoying? Is it Grandmaster? Grandmaster, are you trolling the people? Are you trolling the people? How credible do you consider ICT to be? David, I put out a video recently reacting to a ICT video that kind of went viral. You can check that out. Whether it be ICT or anybody, if somebody doesn't show you live performance, in my opinion, they're better people to watch and learn from. ICT might be a great teacher for some. In fact, I said that in the video. Like, I think if you watched ICT stuff and you're like, this actually resonated with me and gave me a framework, and then you went on to put that into action, right? And found ways that worked for you in the markets, then great, right? There's nothing, maybe ICT is just a great coach. There's coaches out there that's the thing. It's just, at the end of the day, I personally think that you should only really pay attention to people who have proven it. Anyways, that's probably going to wrap up the stream here, guys. We have gone through CPI. CPI came in as expected. If you're interested in getting access to the Edge Finder or joining our private VIP Discord to see the trades that I'm taking, everything is currently 40% off. We'll drop the link here in the chat. If you'd like to speak with a member of our team about whatever we offer, you can connect with someone, do payment plans, pay with crypto, whatever you want. If that is something that you're interested in, you can chat with us right now. Everything is 40% off right now. Anyways, thank you guys very much for tuning into the stream. That's going to wrap it up, and have a great rest of your day. See you guys.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.